Hey traders and investors, it's Serge Berger here. Today what I want to talk about is quickly walk you through my recently changed posture in terms of how I'm trading the S&P 500 or trading stocks, US stocks in particular, which for the past few years has been really with a buy the dip mentality. And I think now that we're seeing a lot more proof in the pudding that various sectors and other indices have topped out, it's just a much higher probability trade to sell into bounces. So we no longer want to buy the bounces for a move to all-time highs. We want to really sell or short into the bounces. There still is a tactic that allows us to buy the bounces, but that is a much nearer time frame. So it's really important to understand that in a topping market or in a bear market, which we're not yet in technically, but I suppose we will be at some point slipping into that over the next, say, 3, 6, maybe 9 months or so, even however briefly. It's just an easier trade and much less frustrating to try to sell the bounces, which really what it means is you selling stock to investors that are still willing to buy it when the trend has clearly shifted to the short side. So if you think about this very simply, the statistics are that if you can understand the general direction of the market, you have something like a 70 or 80% chance of making money, whereas if you try to fight the market, that becomes much more difficult. So we want to make this business as easy as possible for us. So from my point of view, seeing some of these signs that the market may have topped out, I think it's easier to short or sell stock into oversold bounces here, at least for the foreseeable future. Hope this makes sense, guys. Always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.